Here's what's coming up on today's show.
But I think generally speaking, it's important to know how much you have in stocks, bonds, and cash, to know how much risk you're taking based on your situation. So I think those can be helpful. You don't see too many of statements that have those asset allocations on there anymore. But I think it's not a bad thing to have.
Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Well, let's talk about reading your statements, which is something that a lot of people fail to do. They don't really pay particular attention to details. Nearly everybody gets some kind of statement from their investment accounts every month or at least every quarter. Sometimes they look at them, sometimes they don't. But for those who do look at it, how much do they really understand what they're looking at? And let's explore some of the common things found on statements. So, Mark, you ready for this?
I am ready. Let's do this.
Let's talk about income projection. What kind of things are on your statement when it comes to income projection?
I mean, typically those are on retirement, like 401k statements, 403b. You'll see that they, whoever it might be, Fidelity or whoever might put on there, hey, based on your value and assuming you retire at this age, you could have X amount of dollars per year or per month. Mm-hmm. I would not rely on that information because, one, they don't know your life expectancy. Two, they don't know when you're retiring. And three, they don't know how much you're going to be spending in retirement. So that's why you need a customized plan. And so I think it's that information is actually probably more harmful than it is helpful for some people, because I've seen some people rely on that information, and then when we do a deep dive into the plan and look at their situation, we come to find out that those numbers are not accurate.
Well, when it comes to asset allocation summary, do you get anything helping with that on your regular statements?
I think that could be helpful. I mean, a lot of statements don't include that stuff. I know even, we clear through Charles Schwab. Schwab doesn't even include that stuff. We do on our end through a different software provider, which kind of breaks it down. And as far as asset allocation, it is important to know how much you have stocks, bonds, and cash. To get a little deeper, how much you have in different types of stocks, value, growth, small, mid cap, large cap, international bonds, the different maturities, the different types of bonds. So, the asset allocation can be broken down very, very deeply. But I think generally speaking, it's important to know how much you have in stocks, bonds, and cash, to know how much risk you're taking based on your situation. So I think those can be helpful. You don't see too many of statements that have those asset allocations on there anymore. But I think it's not a bad thing to have.
Well, if you do get one that has like a pie chart on it or something like that, do most people actually understand those when they look at them?
No, that's a different question. Understanding it's one thing, but I understand it, but do most people understand it? Probably not.
Yeah. Okay, we talk many times on this program about fees. Have people have no idea what kind of fees they're paying inside their portfolios when they first come to see you. And that's something that really, sometimes those fees aren't listed when you get a statement, and it's sometimes very difficult, even for a financial advisor, to find out exactly what those fees are.
Yeah, we can determine the fees, but I mean, there's different playing fields. There really is. I mean, we are, and I know everybody calls themselves fiduciaries, and I can tell you these other people on the radio that are selling you, insurance products and annuities, they are not fiduciaries, even though they say they are, they're not. But, if you're an RIA, registered investment advisor, or a CFP, which we're both, we are fiduciaries. So we have to be extremely transparent, which I don't have a problem with. Some advisors don't like to discuss fees because they have something to hide. But as I always tell people, if you don't know what you're paying, you can't determine value. Nobody works for free, including us. But, if people that are, our clients know what they're paying us, and if they're staying working with us, then obviously we're providing value, or else they wouldn't be working with us. There are other advisors out there, or I'm using that term loosely, maybe I should call them financial salespeople, who are selling products and things like that, that have a lot of hidden fees and costs that they don't understand or they don't see, which it's hard to determine value when you don't see that. And so a lot of fees are not disclosed on statements. If you're working with a broker-dealer, a lot of fees aren't disclosed on those statements. They are not fiduciaries by trade. If your 401k statements, there's a lot of hidden fees. If you're buying annuities, even these ones where where they tell you that it's not costing you anything. Hopefully you're smart enough to realize that if the person selling it to you is making 7 or 8% of the value of what you're purchasing, that's coming from somewhere, and it's not coming from the company or the person selling it. It's coming from you who's buying it. So you need to understand that as well. So there's a lot of misinformation in there, and I'm not blaming the people buying this stuff. I'm blaming the people selling it. But you got to ask questions, and you got to understand that there's no such thing as a free lunch.
Yeah.
So if you don't know what you're paying, and if it sounds too good to be true, it probably is. So, my biggest advice when it comes to this stuff is ask questions. Your best bet is to, I'm not just touting it because I'm a CFP, but there are other CFPs here in town. If you're not working with a CFP, I would make sure you interview a CFP and work with a CFP because they've done the due diligence and they've been vetted.
You're listening to Saving with Silverman with Mark Silverman, and the number to call if you'd like to have a conversation with him about all of this and have a conversation one-on-one, 520-333-7601. And don't worry, I'll give you that number again coming up in just a few minutes. Right now we're talking about reading your statement, and when it comes to your cost basis, what does that actually mean, and why is that so important for somebody to understand if they see it on a statement?
So cost basis is quite simply, it's used mainly for tax purposes. So, what your cost basis is what you paid for something. And why is that important? One is because you know what you paid for it versus what it's worth, so you know if you made money or not. If you're buying an investment, over time, that investment should grow. That's the purpose of investing, right? Not to lose money, but to make money.
Yeah.
But, in retirement accounts, the cost basis isn't as important. I mean, you want to make sure that your value is going up on those accounts. But where it really comes into play is in taxable accounts, because if you do go ahead and sell, or I should say when you do sell, you're going to have to pay taxes, and the tax is based on what you sold it for versus what you paid for it. And if you made money, you're going to pay capital gains. Mm-hmm. If you lose money, you're going to have a capital loss. But the whole goal of it, like I said, is to have capital gains because you've made money. If you're investing and all you have is losses, you probably shouldn't be doing it yourself or working with the person that's put you into those investments. So cost basis is important. A lot of statements these days don't show all the cost basis. I know when we transfer accounts from other firms, we have to request the cost basis because a lot of the statements don't show it for some reason, or there's probably a good reason for it, but they don't show that information. So It's important to have that information. Statements have gotten a lot simpler, which I don't think is a terrible thing, but it's also because it's less confusing for people, but it doesn't show as much information as they used to.
How about on the topic of disclosures and fine print? I mean, not many of us really take the time to read all the fine print. What kind of things could be kind of hidden in the fine print that folks might not know about?
There could be some fees and charges that you probably you should be aware of if you're working with an advisor or your 401k. There should be some fees and disclosures they can disclose in there. Sometimes if you close your account, they'll show there's a termination fee. I mean, there's a lot of different fees and expenses that they could disclose in there. But really, whoever you're working with, you should have an honest discussion with them and say, what exactly are the fees that I'm paying? Mm-hmm. Total fees. Not just what I see and don't see, but what are the total fees? Because there's hidden fees and expenses even in investment products. Whether it's mutual funds or ETFs, there's expense ratios that have fees in there. And when we do a plan for somebody, we disclose all of that. In fact, we do an analysis for clients from wherever they're invested at, and we'll show them a full disclosure and saying, hey, here's the fees your current advisor is charging you. Here's the underlying expenses of the mutual funds you're in, which you don't see. It's in the prospectus, which again nobody reads, and the statement of additional information, which again you have to ask for and nobody reads. You don't even ask for it, but if you did ask for it, you probably don't read that either. So it's important to understand all these different things, and that's why working with a professional can help uncover this stuff. And again, not to say that we work for free, but you have something to compare it to, because again, if you don't know what you're paying, how do you determine if you're getting value? Yeah. And again, nothing's for free.
You've been listening to the Saving with Silverman podcast. If you have any questions at all about your financial situation, please give Mark Silverman a call. Again, his number is 520-333-7601, or go online to savingwithsilverman.com. For Mark Silverman, I'm Ron Stutz. We'll see you next time on the Saving with Silverman podcast.
The Saving with Silverman podcast is brought to you by Silverman & Associates Wealth Management, LLC, based in Tucson, Arizona. The show is available on Apple Podcasts, Spotify, Google Podcasts, and everywhere you listen to shows. Subscribe to the show on your favorite app today and never miss an episode. Just search for Saving with Silverman to find us, or visit savingwithsilverman.com to listen to past episodes, to contact Mark, and to learn more about how to make smarter decisions with your money.
Did you know that Mark Silverman also has a radio show? Tune in to Saving with Silverman Saturdays and Sundays at 3 p.m. on AM 790 KNST.
All matters discussed on this show are for informational purposes only. Opinions expressed are solely those of Silverman & Associates Wealth Management, LLC, and staff. All topics covered are believed to be from reliable sources. However, Silverman & Associates Wealth Management, LLC makes no representation as to its accuracy or completeness. This show shall in no way be construed as a solicitation to sell securities or investment advisory services to residents of any state other than Arizona or where otherwise permitted. Topics should be discussed with your individual advisor prior to implementation. Fee-based financial planning and investment advisory services offered through Silverman & Associates Wealth Management, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through Silverman & Associates, an affiliated company.